Everyone, welcome to the show. Today we have a very special guest, and his name is Gary Prenevost. He is the author of The Unstoppable Franchisee. He's also a multi-unit franchisee with FranNet, which is a search coaching firm. Gary, welcome to the show.
Thank you very much. Looking forward to the discussion, Robin.
Yeah, so for people who've considered it, maybe people are working jobs, they're getting out of university, and they want to know how the heck do I buy a franchise? You're the guy to answer that question because, Gary, I think you've worked with what is it, over 2,000 people over 22 years, of which a third of those 2,000 people have become franchise owners, not just in Canada but also in the U.S. Um,
Correct.
First question to you, Gary, is wealth creation possible through franchise ownership? If you can share with us some stories from your career.
Absolutely. Matter of fact, I believe, and I've seen it many times, wealth creation through franchise is one of the best ways to create wealth. It is not a get-rich-quick scheme. With any business, it takes effort, it takes time, but as you get the business up and running and then you scale it, some of our clients are looking to protect a lifestyle. I want to move away from the uncertainty of the job, or if they're younger, I don't want to have the career starts and stops that I see my parents having. I want to have more relationship between effort and results in my own business. Whatever it is, as they get the business up and running, Robin, now if I want to scale it, I can add customers, I can add staff. They might even get to a certain level where they've tapped out, maxed the most number of units they can get in that brand, and then they go into multiple brands and they explore that way. So you can earn a lot of money. I've interviewed people who are making millions of dollars a year in profit when doing the research for my book. The but it just because franchising is a path for that, a lot of people get seduced by the opportunity and think they're going to make a lot of money in a brand because a whole lot of other people have. If they don't have the skills to execute that business model, they're not going to succeed. So that's
Hmm.
it. All comes back to what's the right business. In the U.S., there's over 3,000 franchises, 4,000 depending what list you count. In Canada, it's 1,000. There's a lot of options out there. So how do people narrow it down, right?
So how do you narrow down with so many options? Can you walk us through the main categories here of franchises to buy into?
Well, there's over 60 different industries, so there's all kinds of franchises, all kinds of different investment levels, the and different structures. So it's hard to say here's the good ones. I think what's more important, when people start looking at franchise ownership or business ownership, so often many people start and they say, I want to buy an existing business. I don't want to go through the grind of startup, but they spend 2 or 3 years looking and can't find a business where the price matches the value or that it's a stable enough business for them to take over. So they come back to franchising because of the stability in franchising. So here's how people generally start. They go online and type in buy a franchise, buy an existing business, or they go to the franchise shows. It's now franchise show sites are starting again. And they're sitting there going, I'll know it when I see it. Like, that's the one, right? And that's what they're looking for, that experience. Unfortunately, that's really hard to happen because they're they're trying to find something out in the market that, oh, if that's good, I'll fit it.
Yeah.
And that's how people get seduced by the opportunity. It might be an exciting business, but it's not a good business for them. So they're looking for that aha moment. The companies who show up aren't necessarily the best companies. They're the ones who spend the most money on marketing to be the most visible.
Hmm.
Give you a for instance, we just did a franchise show in Toronto this past weekend. There were over 100 exhibitors there. Only two were the brands that I represent because there's over 1,000. How do you get the right ones? So instead of saying I'll know it when I see it type of feeling and reacting to what's available in the market, the way that I start with all my clients, and I recommend anybody where they're using us or somebody else, is what is their model? What are the skills that they have that they want to leverage? We think about three primary resources that every entrepreneur needs is how much money they're going to put into the business. What's the capital required? That's a resource. How much time are they going to put into the business and what's the structure of that time? And the third is what are the transferable skills?
Hmm.
The the transferable skills will dictate the other two.
Hmm.
If I have more skills, I don't need as much money. Let's say I'm good at sales and marketing. I don't have to get a location-based business where the customer comes to me because I know how to go out and make business happen. But
Hmm.
if I've never sold before, I don't know how to network and cold call. I probably want a business where the customers come to me. So that's just an example of what are the transferable skills. And I think the way that people look at it is, what am I really good at in my career that I really like to do that, geez, if I could do this, Gary, in my new business, that would be awesome. And we look at the core functions that they're good at. What are the core business drivers that are needed? And that's where it starts to come together. But nobody's good at everything, Robin. There's business, the people side of things, the customer side, customer generation and relationship management, keeping the customer. There is staffing and HR. There is operations, management of facility and process or whatever other fulfillment. There's IT. There's finances. Nobody's good at everything. So what are the
Yeah.
parts they're really good at? Find businesses that need and that bring the systems and processes to hire or build a team that complement the skills. So we do all that modeling with them, look at 10 to 12 different criteria, sometimes 14 criteria on top of the skills. And most importantly, people aren't going into business to make a lot of sacrifice and not get anywhere. Year one, sacrifice year, year two, build year, but year three and on, now they should be really rocking with the business. They're going into business for that year three and on to have a better quality of life, better flexibility, better income, whatever their goals are. So the modeling has to focus on what does that want to create. And then, okay, now I've got my criteria. The universe will come back and say, okay, now instead of me going out, what's out there?
Hmm.
Now, okay, how does that fit? Oh, no, it's like, here's a metaphor for you.
Hmm.
When you were looking for a life partner, did not even most of us, did we not have a file specification must have, would be have to be cuddly, a good communicator, all the, if they don't have that, well, so you have your must have and you would have your would be nice to have, and you have your must not have factors as well. So I help people figure that out. They've never looked for a business before. I take them places where they haven't thought about it.
Yeah, and it's important to understand that this is not passive income. When you're buying into a franchise, you're very much running a business. Like not the entire business, but on a smaller scale, that location. And then
Well,
as you succeed, you can scale. You can add more locations, and then you find yourself even more busy. But yeah,
so it's interesting you bring up passive because there's a misperception out there that I can buy a business and the business will run itself.
yeah.
A part of that misperception is I'll buy a franchise with a great brand and the customers will just come to me.
Hmm.
No, they might come to you two or three times, but if you're not delivering the brand experience at or above brand promise level, they're not going to come back. And that's why I come all the way back to skills. What are the skills it takes to deliver at or above brand promise level is what somebody has to understand as they're doing the research. But the other element of passive, there's three main structures in business ownership and franchise ownership. So, and I think this would be helpful for your audience to understand.
Hmm.
The first one is owner operator. For the life of the business,
Hmm.
the the business requires the owner to be the core driver of the business. They might build a small team, but they are the face of the business to the customer, and they're always needed. They can take holidays and things, but there's no scale involved or very little scale. Great quality of life, but it's maintaining a lifestyle. The next business structure is executive owner. It might look like an owner operator for the first couple of years. I'm going to build it. I'm going to run it full time for the first couple of years, hire a team and build that team to the point where I work myself out of the working in the business role.
Hmm.
Now, this is where the option to go passive sometimes exists. So, pass one is go passive. I'm going to hire a general manager. I've got that team. The general manager is going
Hmm.
to run the day to day. If somebody is not prepared to put 15 hours a week into their business for the life of their business, they shouldn't be in business because that's the
Hmm.
level of what I call passive engagement. You
Hmm.
want to be communicating with your general manager daily. You want to be looking at your dashboard. What are the KPIs and the financial performance so that you can adjust real time to what's coming. Maximize the things that are working, mitigate the things that aren't working. And that's through ongoing leadership and management. So path one is the general manager or the owner says, okay, general manager, you look after this. I'm going to have a nice life and lots of flexibility. More people who look at the executive model say, okay, I'm going to take that same 15 hours. and manage you,
Hmm.
and you're going to run the business. This other 30, 40 hours, I'm still working full time in the business, but I'm going to focus on scale. If I've got a sales and marketing background, I'm going to drive the customer growth. If I've got an operations background, I'm going to drive operational efficiencies and hire a sales team or whatever the model is. But this is where I get to one unit. Okay, that worked really well. Let me get the second unit open or second territory and then scale from there.
Yeah.
And you can do that from from usually around that 2 year mark is what franchisors like it takes to really get that team gelled.
Yeah.
So I say it this way: year one, sacrifice year. You're going from that expert in the career, what you've had up until now, state, to being a novice at an entrepreneur in whichever business you join or buy. Year two, year one, it takes you to get through that learning curve to get to competency. Competency, I'm
Hmm.
just okay at running my business. I got the basics down, but I got a lot of learning to do, and I'm at least profitable, right? I'm break even and profitable. Now, year two is going from competency to proficiency. Now I'm getting good at running my business. So, year one, sacrifice year, put more time, more effort. Usually takes longer and takes more money than people anticipate.
Yeah.
Year two, I'm taking some money out of profit, but I'm still really working at the business. Now at going into year three, I'm at proficiency. Now I'm ready to execute my stride quality of life and income and all of that. So that's the journey. And then for people who want to scale, they go from uh, proficiency to mastery. And that's another 2 to 3 year journey as they scale up and get to multiple units.
Hmm.
When I did interviews, I talked to people who had 60 and 80 units. They're running major organizations and they
Exactly.
have 2 and 3 layers of management for that. So
Yeah.
it's all the way back to wealth creation and franchising. It can be done in many different ways. It depends on what the criteria are.
So in Canada, for a start here, where does somebody even go today to find the master directory of those 1,000 franchise opportunities?
There isn't any directory anywhere. All the directories that exist are paid for. So in
Hmm.
Canada, you've got the Canadian Franchise Association, www.cfa.ca,
Hmm.
and they've got a site on there called lookforafranchise.ca. That's the best place, but there's probably only 600, 700 brands. So and then you've got the portal sites. There's lots of portal sites. Portal sites are good in that they have a lot of listings, but portals are portals. When somebody puts their information and they think, okay, brand A, I want to get brand A, so I'm gonna give them my information. Well, you're giving the information to the portal's selling it to brand A and other brands. So
Mm.
you just have to be aware that that's part of that business model. There's good information, entry level information, but it's hard to get the right
Yeah.
information. And what you find online is enough to get the curiosity
Hmm.
going, but it's not enough to understand the business. So when we work with our clients, all that modeling that we've just been talking about, I help people figure that out. We work with them to define their skills, their goals, their criteria, 10 to 14 different criteria, all those knockout factors. Then we introduce options that fit the criteria and Robin, that they fit what the franchisor is looking for. Because the
Yep.
franchisor says, here's my ideal candidate, my ideal franchisee. The closer you come to that, the better. So I bring those two together. I might only show 3 or 4 options to start. And then I coach people through the research to get to that clarity of how well can they execute the business. People should be allowing themselves probably 3 to 4 months at 15 hours a week, 5 hours per brand roughly, to get all the way through to clarity on how well they can run the business and can it achieve their goals. I've had clients do it in 6 weeks and even 4 weeks. They turn it into a full-time job. They don't skip steps,
Hmm.
but it takes a lot of work to understand what it takes to execute a business.
And for the Americans watching, what is the directory in the US to look up those 3,000
There,
opportunities?
I don't know that there is one directory. There's over
Okay.
4,000 franchises in the U.S., so there's lots, and you just get bombarded.
Yeah, exactly. Which is where you work your magic, right? You know exactly where to
Yeah.
go. So with so many opportunities, obviously people can work with someone like you. But I've heard you talk about this before. The philosophy of there's really two major types of franchises, right? There's the need based, and there's the want based.
Mm.
Let's explore that a bit.
So this is one of those things people rarely think about. Um, and I'll lead with one of the myths in franchising. One of the myths in franchising is it's only food and retail. So the food and retail only makes up, it's under 40% of the industry.
Yep.
So, but it's a big chunk. And why is it? Is the visible face of franchising.
Mm-hmm.
Everywhere you go, Main Street North America, you see franchises up and down everywhere because that's the main draw. The other myth associated with food is everybody's got to eat. It's going to be a good business. Well, customer flavors profiles change from time to time as they shift from major ethnicity or different flavors, or I've had enough of that, I'm going to change, and they move away from the customer. So it's understanding how do you get the customers. So I think when you look at need-based businesses, the more the product or service is in demand, regardless of what the economy is doing, regardless of what consumer behavior is, the safer it is.
Mm-hmm.
I'll give you an example. Every 8 weeks, I need a haircut. Um, if I get in a car accident, I need a collision shop. Every few months, I need my vehicle serviced. If I'm a senior and I'm aging, I need care, some type of assistance. So regardless of what the economy is doing, I'm going to pay for those services.
Mm-hmm.
And there's lots of them. I just have a few examples. So that's need based. Now I just have to hire the right type of technician, the right type of staff to fulfill the service because I don't, as the owner, don't want to be doing the work. I want to
Yep.
build a team of workers, right? That's how you scale a business. Want-based business. Every few weeks, I want a good meal at a restaurant.
Mm-hmm.
I might want a massage. My insurance plan covers X amount per year, but I want more than that. So I'll have the base level, then I'll buy more. So that's kind of in between that need and want base. If I have health issues, I'm going to go for the massage or other health services. So things like that. But the pets, I love the pet industry.
Mm-hmm.
The pet industry, people spend more on their pets than they do on their kids. Education. I love the education industry because as parents, we want our kids to do better. So there's
Yep.
those things that no matter what, people are going to spend money on. It
Like
just helps.
Kumon and other opportunities, right, in that space.
Kumon, Sylvan, you just do
Yeah.
education franchise, you're going to get them all.
Yep.
There's STEM, there's not just tutoring, it's what is the supplemental education. So it's my clients when they're looking for the uncertainty in times of uncertainty, and let's right now, what we're less than a week away from whether the tariffs are going to come into Canada or not. And in the US, those tariffs might affect the cost of living in the US. So that creates market uncertainty. So it's the more stable the product or service is, the less risky it is. Now, I'm not saying people shouldn't buy a want-based business. I'm saying that they should understand the landscape and manage the risk associated with that landscape.
Absolutely. Like there's trends that we've seen that have saturated the market very quickly, like shawarma. Like how many more shawarma joints are we going to see? That could be saturated. Um, Here's one up for debate. Tim Hortons, is that a need or a want? I think in my case, it's become a need these days, a crutch. Daily Tim's.
Well, it's coffee. Coffee is the need. The brand where you go to get it is going to be the. So I look at so that's some of the examples of an element of a
Yeah.
great brand, an iconic Canadian culture-based brand. They
Mm-hmm.
have developed tremendous brand loyalty. So people say, I wanted Tim Hortons. Look at that, it's successful. Well, it is successful if they can execute the brand promise and run. Like if they've never managed staff before, an hourly transient staff, and you've got to now start managing 50, 60 part-time teenagers whose idea of showing up is all they should do. Now that's
Mm-hmm.
overgeneralization. That's not fair to some teenagers. I apologize, but you're managing an adversity. You're managing a lot of different things. So the less you have the experience, the higher the risk.
Yep.
Okay. So that's part of it. The other, when you take a mature brand, pick any of the mature brands, um, you want a new location, you're likely not going to get it in the city because they're dominant. They've got all the places. And if they are going to grow in the city, they're going to give their existing strong franchisees first crack because they
Yep.
know how that person is operating. So you've got to be more flexible in going away from the core, moving sometimes to a different province or even a state if you want to get that super brand, if you're really married to the brand.
Go to where there's growth, exactly. Because yeah, Tim Hortons is basically in every corner here in
Yeah.
the Greater Toronto area. I think I was reading a story recently. I forget where it was, Mississauga News, I think the first franchise owner who bought into the very first franchise of Tim Hortons, I think he opened up in Clarkson. And then he ended up buying 18 or 19 or 20 Tim Hortons locations after that. And it's just a great success story, right?
Yeah,
Like very early on, took a chance when it wasn't that household name today.
okay, so that was then,
Yeah,
and this is now. So
yeah,
we'd love to have that experience, knowing what we know in hindsight. So now we come back to scale.
yeah.
Okay, so the subject of scale. When somebody's doing the right level of investigating, they can look at an emerging brand. Often it's a brand coming from the US into Canada, or from one region in the country to another region. So it might be based in California going through the US before it comes to Canada, or Vancouver coming into Ontario.
Hmm.
But let's say they have 15 or 20 locations in Western Canada and they want to come into Ontario. We don't know that the Ontario consumer is exactly like the BC
Hmm.
consumer. But there's enough systems and processes with that number of franchisees. So somebody here is saying, "Wow, awesome brand, awesome experience, very successful franchisees through their research. I want to buy five. I want to secure my market." And so there's two ways that that happens. One is the safer way. Let me buy one. Let me
Hmm.
figure out how well I can run it. And once I've got it up and running, now I'll buy more. But that might take 2 to 3 years. While
Hmm.
they are figuring out how to run it, the franchisor is still growing and they're selling everything around them. So when
Yeah.
the person comes in and says, "I want to buy more," it's like, "Sorry, we're sold out anywhere near you. You gotta go over there." And now you lose the economies of scale of being proximate or contiguous. So the second option is, this is as long as somebody is well capitalized enough, is you buy the first one, you pay the franchise fee the first one, but you also pay the franchise fee for however many more units you want. And most franchisors offer a discount on the more you buy, the lower the franchise per unit. And then you sign a development schedule that year one, I'm going to run the first one, year two, I'm going to open the second one. And so you've got X amount of time depending on how many units you buy.
Hmm.
So now you protect and control the market. And then as you scale over time, then okay, I want to buy more. So one of my clients, it's very interesting. He came to me, I think it was 2018, and bought two hair care salons.
Okay.
And he got those going and improved them. Then he bought one of the other franchisees and bought eight of that person's locations. So one person was exiting, this person grows. That's why you grow once you got multiple units. And he did so well, he's able to leave his executive job.
Hmm.
And now he's looking for a different brand. And I've got the economic engine going. I don't need to work now. I can put full time into scaling to the next adventure. So that's an example. Now, one thing I didn't talk about in terms of the three, I said there was three options: executive owner, owner operator. I missed mentioning the third one, so it ties back to this customer:
Hmm.
semi-absentee owner from the start. The business is running full time.
Hmm.
I hire an experienced general manager
Hmm.
from that industry. I manage the manager, I manage the dashboard. So the same as the executive owner, it just happens faster. It takes more capital because I'm managing that manager through startup. This particular client, that's exactly what he did. Is he was working full time and he hired the manager to run it. So he just had to cash flow the business to get it to break even. But the business is, once you get that scale, that same 15 hours a week, you can get more units. And it's not, okay, I've got 15 hours for this one, 15 hours for that one. I've got 3 units. I've got 45 hours. Oh my gosh, how am I going to do my full-time job? It doesn't work that way. You instead of, I've got a meeting with a manager and I'm looking at the dashboard. Well, now I'm meeting with two managers and I'm looking at the dashboard for two stores instead of one store. Might take an hour or two more, but it's the same set of meetings and the same process and the same reviews.
Hmm.
So the more efficient somebody runs the business, the more they're able to scale. Now,
So the flip challenge,
semi-absentee
Gary,
kind of,
is
just one last point.
yeah,
Semi-absentee franchises, you better have capital because they in
yeah,
Canada they start at the 350 to $400,000. You're
yeah.
2/3 of the bank's money, 1/3 of your money. In the U.S., they're a little bit less expensive per for the same brand, just lower cost of operations, and the banks are a little bit more competitive in the U.S.
This is the perfect segue because it's one thing to sift through all the opportunities and finally decide on, okay, this is my target, this is the franchise I want to buy into. But then the highest barrier for most people, including myself, if I ever consider buying into a franchise, is the capital investment. And a lot of the times they're looking for unencumbered cash as well to make up a big portion. Walk us through how someone can finance their first franchise
Okay, well, I
investment.
think first and foremost, it's important to understand this is one of the other myths in franchising. Big investment needs big returns, and all franchisors are expensive. We have franchises from $60,000, $75,000 all the way into the millions of dollars. The
Mhm.
vast majority of my clients are investing all in, including bank financing, between $200,000 and $600,000. So I tell people they should have about 175 as a floor. 100,000 is a good start because it's not just what it takes to open. You've got to be able to fund the working capital and your lifestyle through that launch phase. So I'll break that down a little bit more.
Mhm.
The first level in franchising is the initial investment.
Mhm.
Franchisors, by law, in the franchise disclosure documents, have to tell prospective franchisees what the initial investment is. So I define initial investment, Robin, as all the money it takes to get the business open to start seeing customers day one.
Yep.
So build out, franchise fees, inventory, fixtures, equipment, initial grand opening marketing. What is the staffing? Whatever it is, all of that the franchisor gives a low and a high based on historical data. Okay, so that is accurate. So people say, okay, that business is $300,000. I've got 100,000. The bank will pony up 200. That two-thirds, one-third. I'm good. I can afford to get this business. No way,
Yep.
because it's open day one. If all they have is $100,000, that's trouble. So now it's the working capital. Working capital is from when the business is open day one to when it hits consistent break even. In other words, I have enough revenue from my customers coming in to cover my operating expenses, not including my salary. The owner pays themselves after everything is done in the first year, that sacrifice year. So the franchisor might say 3 months of working capital, $25,000. And you're thinking, okay, I can find another $10,000, 100 plus 10, I can get to 330. I'm good.
Mhm.
Well, it says for the first 3 months. See, franchisors have very solid predictability about how what it costs for the first 3 months. They don't know how well the franchisees are going to show up, follow the systems and processes. Are they going to accelerate and have a faster launch? Or are they going to miss some things and have a longer development to break even? When you talk to existing franchisees, as I want all my clients to do, they're going to hear from franchisees that it takes 6, 9, 12 months to get to break even, depending on what the business is.
Yep.
Okay, so if it's 25,000 for the first 3 months, it doesn't mean it's going to be 100 for 12 because you're slowly eroding the cash flow burn, but it's probably going to be at least another 60, $70,000.
Mhm.
So that becomes what does it take to get it to break even so that you stop feeding the business with your cash? Okay. Then the third element, okay, now they're saying, okay, 400,000, I'll get to $140,000. I can still do it. I'm getting a little battle weary, but I'll figure out how to make it work. I'll borrow from mom and dad or a few,
Yeah.
whoever it is. And then they buy the business and then they're running the business and they're working full time. Remember, year one, I'm not drawing full time income. In month six, oh geez, I got to pay my mortgage and I got to pay all my household bills, or I got to pay my staff and I got to pay my rent because they didn't figure out what they need for personal working capital if they're the principal breadwinner of the family. If you're going to work full time in a business and you're not drawing income and the family needs your income to survive,
Mhm.
let's say it's an after tax base of $4,000 a month. Well, call it 12 months to break even. 4,000 times 12 is $48,000.
Mhm.
So it's the whole picture. So I want people to understand what the franchisor says is part of the picture, what the existing franchisees, you talk to enough existing franchisees, usually 10 to 12 franchisees, what I like to see people, one-third top, one-third middle, one-third unhappy franchisees. What does it take? What are the possibilities? So that's how people start to figure out what the possibilities are, what the investment requirement is, and more importantly, what is the work it takes to achieve the success level. So now we come all the way back to the skills and the
Yep.
what we talked about earlier.
It's a big leap, and I know you mentioned the story of the executive who went from the corporate world to owning salons and then building out, the salon franchise footprint. Can you share some more stories about people who've taken that leap, and maybe someone who wasn't an executive, maybe someone who's working, a mid-level job, and you help them through it?
I had there's a few. I had two brothers, 20 and 22. Um, the they said, I don't want to, I'm not a very good employee. I don't take direction well. Highly independent was one of the brothers. Bank of mom and dad. They couldn't afford it on their own. Bank of mom and dad had some business or entrepreneurial experience. So they bought a franchise and then they built it up and then they bought a couple more of that location or that type of business. It was an automotive specialty business. I've had lots of people buy the home improvement business. Home improvement business, that category is considered an old growth industry.
Yeah.
People are always investing in their homes. There's enough people doing that, so it could be flooring, painting, floor window coverings, bathrooms, kitchens. There's all kinds of things because it adds to the value of the home.
Hmm.
So they have operational skills from and project management skills from work. They may be handy around the home, but they are not on the tools in the business. They're not doing the installation work. They are driving the franchisors marketing. They are hiring the technical people to do the work, and they're managing quality control and those other things.
Yeah.
Education, tutoring, same similar thing. They're not teachers. Matter of fact, most franchisors don't want industry experience. They don't want the bad habits that you've got from your industry in the career because they want you to do it their way, Robin. What franchisors want is that transferable leverage of skills that they can teach you how to do it their way.
There's some stories I've heard over the years where you've got the guy who started out at McDonald's. He worked his way up, and he was presented with an opportunity to buy into his very first McDonald's franchise. Are these real stories? Is this something that you'd recommend? Someone working there before buying in, maybe networking and understanding the business?
Well, those stories exist, especially with some of the legacy brands. The it depends on the pace that somebody wants to go at.
Yeah.
That's a long, slow pace. Most of my clients they come to me saying, Gary, I want a business. I want to start something in 3 to 4 months.
Yep.
I'm prepared to do heavy lifting to understand the business, but it might take me a year to open if it's a location-based business. But I want to make my decision in 3 to 4 months of what the business is so I can chart my future. So through the research, so we come back to the heart of that question, how do I get the practical experience to run that business?
Hmm.
Well, working in a business and learning how it's done is you're at the mercy of that franchisee, how well they're doing it. When you instead of saying I'm going to work in the business and see how well I do it, then there's a way better talking to enough franchisees. What is the work it takes? Now we take another great Canadian brand called Cobb's Bread. Part of their recruitment model is after you've gone through all the hoops before you're finally approved, you're going to be spending some time in the store to
Hmm.
really understand, can you get up at the hours and can you manage the staff and how do you work with the other staff? They don't just assess, can you do the work? They assess, do you fit the culture?
Hmm. So you match the person with the business because not every person, can run like 1,000 different types of businesses, right? So it's really a personality test, it's a skill test of those core skills. But then on the other side, Gary, the franchisor will put you through the interview process, the person through the interview, and see if they're a good fit. Can you walk us through that process?
So most people think I get to buy a franchise. The franchisor is going to sell me a franchise. And they don't pay enough attention to how they show up, Robin.
Okay.
I've had people go all the way through to discovery day. It's the right business. They're all excited about it, and they get turned down by the franchisor
Interesting.
because they didn't fit the culture or they weren't mindful of how to show up.
Hmm.
So instead of saying, okay, don't quite understand that. Can you help me? Can you explain that a little better? Why did you do it that way? Now, that might be a little bit of extreme, but you have an example. So great franchisors have a franchise awarding process. It's a mutual evaluation. They're not trying to sell you because they don't know you're a good fit yet. So they have a 6 to 10 step process. Mr. or Ms. Prospect, this is what we are going to be sharing with you. This is what we expect of you. At First call, we're going to give you an overview, and then we're going to want you to watch these videos or whatever the instruction is. So they get on the next call. Did you watch the videos? Oh, I got through them. Yeah. But the franchisor can see on their portal exactly how far
Mm,
they got. And if they didn't even log in, now they know that this prospect is lying.
yep,
Not a good start,
yep.
right? So the manage the franchisor's optics of you, be on your best behavior, show them that you can follow a system. Because if you can follow the system in the
Hmm.
recruiting process, that's an indicator to the franchisor that you're going to be able to take direction the way that they want you to do things once you become a franchisee. But the opposite is true.
Hmm.
I have some franchisors where the franchise salesperson is very casual. It's, hey, go through this information. Once you've gone through it, let me know and we'll schedule our next call. And or they even miss calls or so whatever. And it's so we're compared to another franchisee. Okay, we finished this. I need you to do this, this, and this, and then let's schedule our next call right now. And when we get on that call, we're going to review what your learnings were, and then we're going to go to this. Two entirely different processes, right?
Yep.
What I look for and want my clients to do is when they're having those discussions with the franchisor, they're focused. There's no distractions. You're not taking a call while you're driving. That's a bad signal to a franchisor. You're the franchisor that you're going to buy a business that's going to affect what's one of the biggest financial decisions you're going to make in your life. And you don't want to be focused on learning it. Probably going to say you're a little going to be too casual as a franchisee.
Yep.
So mindful of how you show up. It's not just, it's the symptom is how you show up. The problem is that you're not focused enough.
Do you recommend that people go to the franchise show? I think there's one that just happened in Toronto. Is it a worthwhile experience?
So there was a franchise show this past weekend,
Yeah.
and there's two reasons why people go to the franchise show. First and foremost, it's look at the seminars, attend the seminars. You're learning from the industry experts.
Hmm.
I speak both days at the show, so I speak on how to find the ideal franchise. I also have online webinars that people can get if they can't get to the shows. The other is to get a sense of the landscape.
Hmm.
So if there is 60 or 100 franchise at the show, you get to meet with these people face to face.
Yep.
And what you hear is what the business is and if it's food or senior care or whatever. So you get to talk to the people. But I think one of the most important questions when you're at a franchise show that you should ask, and you should ask it anyways, but when you're looking whether it's a franchise show or not, is okay, thank you for what the business is, what you do. What are the critical roles that the owner has to do to drive the business?
Mm. And it'll be different for
It'll be
each
it, but
franchise, for each
if
answer. Yeah.
if the franchise person in the booth can't answer that, then it's either, hey, the purpose of the booth is just to get the first one, and your next call they're going to answer that. That's okay.
Yeah.
Or it's a less sophisticated franchisor who doesn't know how to communicate that, and that's a
Hmm.
different issue. The other thing with franchise shows, so you've got franchise shows offered by the Canadian Franchise Association. It's only franchises.
Hmm.
You've got the other franchise shows, which is franchisors and business opportunities. So you get
Mm.
the vending machines and the multi-level marketing and whatever else. Franchisors, by law, in most jurisdictions in North America, have to be accountable to whatever they claim. So if they start painting pictures of how much money you can make, it's got to be based on fact of what the
Hmm.
other franchisees in the past have done. If you're a vending machine or multi-level or any other thing that's not a franchise, you don't have that accountability. You can tell wonderful stories, but it's harder for people to validate. So I say be suspicious.
Yep.
You don't want to go to a franchise show and then go to a seminar on Monday night and another seminar the following week and be pressured into buying a whole bunch of things. I use the same rules. It should take 2 to 3 months, 30 to 40 physical hours to understand the business. What is the work? What is the market? What is the competition? How hard is it to run these businesses? How hard is it to get customers?
Yep.
How well does that match my skills?
And I'm aware that sometimes the banks, the big five banks in Canada, will send a rep to the franchise show to give a talk about financing. Is there such thing, Gary, as a more like friendly franchise lender in Canada? Or are they all equal? Like if you look at RBC, CIBC, TD, are there like
They
what are the
have
differences?
they have their focuses. So CIBC as an example, they are really prolific in the big brands, the multi-million dollar enterprises. They all play at that level. So the RBC, TD, BMO are the ones that we see most of our clients being referred to. Scotiabank is kind of mid-level. Credit unions, the Meridian
Oh,
Credit Union is great in Ontario. So in Canada, we have five Class A banks, and then the remaining banks, there's very, very little competition. It's here's the rules, here's what you have, and if you don't meet this, sorry. In the US, the banking system, it's very, very competitive. And there are lots of banks that will go 80% financing.
wow.
I don't recommend people get that leverage unless they've got a lot of capital and a lot of skills in managing. You, the I like the two-thirds, one-third because it's manageable. You're not overburdening. The higher the debt, the more cash flow it sucks to service the debt instead of focusing on growth and profit.
Yeah. What's your end-to-end process when you start working with a new client all the way through to the end, just so people are aware?
Well, so we offer a no-cost service. It's kind of like executive recruiting applied to franchising. People come to us, Robin, saying, "I want to be in business. I don't know what my options are. I don't know where to look. Sometimes even I don't know how to look, because they've
Yep.
never done this before." Before we ever start talking about specific brands, we do personality assessment. We want to see their entrepreneurial DNA. We do a
Yep.
financial picture. We want to make sure, using a boxing term, people punch within their weight class. We don't want to see them overcapitalized or undercapitalized, pardon me. And that same criteria, like the three elements of investment that I talked about before. We want to know, just because they have a lot of money, it doesn't mean that's what they're comfortable with. So we have to understand their comfort zones. We look at what are their transferable, leverageable skills. So I do 2 to 3 hours of consulting work where I'm investing my time in understanding the client. What do they bring to the table? Where are they lacking? Where are the gaps? And we look at 10 to 14 different criteria. Most people
Hmm.
think of, here's the criteria that most people think of, then they go out and buy a business. How much is the investment? How many hours I got to work? What type of staff do I have? How far do I got to drive? And how much money can I make? Okay, well, gee, how much money can I make? Is it one-time customers? I have to have a whole lot of them, or is it I make a few pennies a transaction, I have to have a ton of them,
Yep.
or all the different elements, right? So how do I, what are the skills I have to get the customers, or do I have to learn that from the franchisor? So we look at a lot more criteria than that. The things people have never figured out. Most importantly in that modeling is what are their short-term, mid-term, long-term financial and lifestyle goals. And I'm not just talking a little bit, oh, I want to work, 20 hours a week and I want to have a manager in place. No, it's like what is the depth to it? So that's that modeling. Once I have the modeling done, now I know because I've got the models of all the franchisors, what they look for, what the work it takes, and how much money that these businesses can earn based on
Hmm.
the average to mid high average franchisee. I go like that. I bring the franchisors, usually three or four brands, to the client, and then now the introduction starts. So I make the introductions to the franchisor. The franchisor takes over the sales process. I am never, and I will not, I've been asked to tell people what
Mm.
business I think they should do. I won't do that. What my job is to guide the client through the research journey so that they can understand which business is right for them. I've had several clients over the years where they've gone all the way through the process with two brands. So all the way through the research, two discovery days. Discovery day meaning you're at the end and you're about to meet the franchisor. It's the last step before you buy. So you go to a franchise lawyer, spend your $2,000, $2,500 on the franchise review. So you're investing time and money, airplane tickets and everything. And they do that twice. Gary, I can buy
Hmm.
either one of these brands. Which one should I buy? Well, from what I see, I think I know which one I do, but what happens if I'm wrong? So
So why
I
don't you
don't,
actually tell them?
because it tells me their research isn't done.
Okay.
So
Okay.
here's what usually when you get to somebody that situation, the head is saying one direction, the heart is saying one direction.
Yep.
Before they're ready to buy, they have to have the head and the heart aligned.
Hmm.
And then it comes to the third check, which is gut. Does it feel right?
Hmm.
See, going back to that, I'll know it when I see it feeling that we were talking at the beginning. Most people lead with their gut. Oh, I think that feels pretty good. I should get that business. No, leave the gut till the end when you have enough data.
Have you seen instances where a Canadian will come to you who has capital to invest, and they'll say, Gary, I don't want to buy into a franchise in Canada. I actually want to open one up in the US.
Absolutely. And I'm associated with an immigration firm that can do all the work. So usually it's an E2 visa. So it
Hmm.
depends on what state you want to go to, what type of industry. A lot of US franchisors don't want E2 visa applicants because they want somebody already embedded in the community. There's still enough out there that it's worth doing. But the other challenge with E2 visas is the banks don't know you. You haven't got a US credit score
Yeah.
established. If you don't have your citizenship in the US, like a dual citizenship, they're not going to get funded by the bank. So you have to self-fund. And it's usually when right now we're at a buck 40, a buck 42 for the Canadian dollar to US. So that really increases the cost. On top of that, the cost of moving. So the same risk going to the US are is the same as if I'm moving from one city to another. There's additional risk to get that business if it's the first one because you don't have roots in the community. You have to completely rebuild your base.
Yeah.
That's more work. That people need to understand that as a risk. See, this is the type of thing people don't think about.
No.
My job is to throw hurdles and obstacles as part of the research. Well, you haven't thought about this, and how are you going to overcome this? So I shine the light in the dark corners of the room that they're not looking at, even if it's going to scare them. Because if they're going to buy a business, I go back to what I said before, Robin, this is
Hmm.
the right business for me. They can answer that. They also have, this is how I'm going to achieve it, roles, activities, behaviors, results for the first 2 years. When they can say this is why and this is how, they're ready to buy. Most people say this is why and they hope they can get the how.
Yeah.
And that's how they get in trouble.
If we can talk again about the dollars and cents of buying a franchise, so it's obviously not easy in the first year. The second year, still, you haven't hit your stride. The third year, what typically can people look for in terms of return on investment and how much they can be pulling from the franchise? I know it varies as you go up the different categories of scale and size of a franchise, but
The best indicator of financial results is the what I'll call the third quartile of the franchisee performance bell curve. So quartile one, bottom 25%.
hmm.
The unhappy franchisees, the people who are not following the system and they might be losing money or just low break even.
Yeah.
Might even, $40,000 a year in profit might be high.
Hmm.
The next quartile is the low to average performers, 25 to 50%.
Hmm.
Now, these are sometimes people, not excluded from this is people who are starting out. This is after they've been running for a while.
Hmm.
So people who are in this category, they might be the ones that, hey, I've got a comfortable business. I don't want to work much harder. This is what I set out to do. Just keep me informed. Give me the room to operate as I see fit. That's a lifestyle and an engagement choice. The third quartile is the 50 to 75%. This is where the mid average to high average are. That's where, if you're following the system, the people who are strongly engaged in executing the model and focusing on growing, that's the best indicator of what your likelihood is. You don't want to be that your income goals are only the top 25% are achieving it, because it might take somebody 5, 7 years to become a top performer. Remember, beginner, competency, proficiency, top performers, mastery.
Hmm.
It's a long journey. It's an exciting journey once you get there. I'm there myself. So,
Hmm.
but man, oh man, there've been bumps along the way.
Yeah.
So what magic dust are you going to sprinkle on yourself if you're only the top 25% are your goals and you want to do that in 2 years? Doesn't make sense.
Yeah.
So now we come back to, I think, that's a general answer. What I tell people is the stride phase. So what you want your business to be. Let's say you're used to earning $125,000 and you want to be earning $125,000, $150,000 or better. Okay, so if you can't get anywhere near that in year three, it might not be the right business for you. I've had many people who I want to get to 125, 150, but they see it taking year three, year four, they're still
Hmm.
getting there. I've had other people want that and they get there faster because they execute the sales process better.
Hmm.
But if they're not prepared to do the work that the people who are doing it, are doing. That's why the calling existing franchisees and understanding what is the work and how long it takes, that's where we're going to get that clarity.
Yep.
And I give the clients questions along the way, real time, based on whatever questions they're fielding or hearing from the franchisees to get deeper understanding of that.
You've built up quite the network over 22 years, Gary. So I'm curious if someone is interested in opening, up that Popeyes franchise, let's say, they're just starting out the discovery process. Can you connect that new client with someone who's successfully doing it now, is running that
Well,
Popeyes down the street?
Popeyes, what I would classify as a legacy brand. They are typically not. See, so the more mature brands, they don't need third-party intermediaries like myself or other brokers because they've got a long waiting list of prospective franchisees.
Okay.
We have some legacy brands, but they
Yeah.
have, we have this pocket of Toronto or whatever. So that's the other thing with the legacy brands is there's not as much location availability. So
Mm-hmm.
what we get is the mid-level brands, either mature brands in the US coming into Canada, creating that new market opportunity, or brands from Western Canada coming into Ontario, or vice versa. So we get the mid-sized brands that are in mid-stage growth where
Mm-hmm.
there's the most opportunity.
In the year 2025, what are the most interesting growth brands right now emerging in Canada that people have been inquiring about with you that you've been seeing?
I get more, I don't get brands because
Hmm.
people, like, I might get the odd brand, but like the common, as you said earlier on, can you help me buy a Timmy's or a
Yeah.
Popeyes?
Yeah.
No, you need to go direct to them. But let's take a step back. Why do you want a Timmy's or a Popeyes
Mm.
or whatever? So
Yeah.
I always come back to why do they want to be in business ownership?
Hmm.
And while, although when I see it, I think Popeyes is a good brand for me. It may well be if they've got that skill set, but if they
Yeah.
don't, then well, are you open to considering other things? I think the slightly different answer I would provide to that question, Robin, is what are the one of the common questions I guess, what's the hottest franchise out there?
Hmm.
What's hot today? And it's like what's hot is
Hmm.
what's selling the most. It doesn't mean it's got the most sustainability,
Yeah.
right? I want something that is strong today and has the staying power to stay strong downstream 5 years, 10 years, not 2 years later. The favor profile that we were talking about earlier drops off. And now I bought the business expecting I would be up here in my sales, and the consumer profile has changed, and now it's down here. And this is not a fun life.
Yeah.
If you think
It's the
about
pursuit of that evergreen franchise
yeah.
opportunity, right? That like you hear stories about that, like the coin wash down the street and still making money, and you have no idea why or how, but it's still making money.
Yeah, I frankly wish that there were coin op like laundromat franchises
Yeah. Right.
because that is a great model, but there's just that's a good example of a need-based business.
Yeah, need-based business. For people that talk themselves out of buying a franchise at the very end of the process, if they're not declined by the franchisor, why do they talk themselves out of it?
Do they talk themselves out of it? I'm going to come back to that. I'm going to do an answer to a different question not asked. I see more people talking themselves out of buying a franchise before they ever start.
Okay.
The franchise is too expensive. I can't afford it. Franchise only food and retail. I don't want to be in food and retail. I don't want to be sitting behind a counter all day. Um, I don't want to buy myself a long hours, low paying job. All the things. I know somebody else who wasn't successful in franchising. All franchising is bad. Well, those are really unfortunate. Their fear stops them from even looking. Fear, we are genetically programmed to pay attention to fear.
Hmm.
But what fear should do is cause us to, like, think of the deer. It's fight or flight, right? I hear a noise, I pop my head up, and oh, that's safe. I'm going to go back down to eating. Or, oh crap, bear, and off I go. Right? So, well, in franchising or people looking at self-employment, it's noise. Oh no, oh, boy, I'm not even going to look. What that moment in between fight or flight is freeze.
Yep.
And in deer, it happens in microsecond. In franchising, it's okay. I'm afraid of this, but
Hmm.
is my fear based on false assumptions or lack of information? How do I get more information so I can get comfortable enough? I manage my fear and use it as my best friend to ask tougher questions because the fear will create better questions to slowly progress and mitigate through the fear.
Hmm.
So coming back to why do people not buy?
Yeah.
And two-thirds of my clients are come to not buying.
Yeah.
It's I'm not ready.
Hmm.
It's more capital than I expected, or it's more risk than I expected.
Hmm.
Often my spouse and I have decided we don't want to risk the amount of savings that we have. It's what we don't have enough runway if things don't work. So the closer they our retirement, that would be one. It would be I don't have the skills and the franchisor, the learning curve is too steep. I'm not ready. I'd like to come back in a few years. I have several clients every year who are 3 years, 5 years, even 10 years back. I'm working with a client right now who worked with me in 2006. So they had a great run in corporate. It's time. Okay, I've had enough of corporate, and
Yeah.
it's a lot less fun than it used to be. I'm tired of all the rules. It's time for me to run my own ship. So there's a lot of reasons, but it comes down to I don't have a clear path to being able to achieve my financial and lifestyle goals. So I see how it can
Yeah.
be done, but I'm not prepared to do the work. That's one aspect or one possibility. Or I see what needs to be done and I can't see that it's good enough for me to learn how to do the work.
Yeah. But could we say that buying into a franchise is still less risky than starting a new business?
Oh, by far. We have in Canada and states, in the states, the U.S. is similar. Roughly 50% of all start from scratch businesses fail within the first 5 years. Franchising, we in Canada, there's no standard industrial code. There's no tracking of how
Mm.
many franchise there are. There's no definition in business under government tracking for that. In the US, there is. In
Hmm.
Canada, so we say roughly what we see from industry averages is that 15 to 20% of franchisees fail. In the US, with all the data that they track, it's approaching 90% of franchisees succeed after 10 years.
Wow.
We're just more conservative. We say, being
Yeah.
Canadian, it's like it
Being
might be
Canadian.
90% for pre-COVID for the vast majority of all the people I placed. 92% of my clients were still in business,
That's
unless
amazing.
they sold it. When again, way above industry average because they're so much more aware of what it takes to run the business. And I've had numerous clients be in the top 5%, even the top number one franchisee, because they knew how to go. So COVID, there were some businesses that unfortunately suffered and weren't able to recover through the pandemic, and that was across not just franchising but everywhere. So that was an unusual event.
But the odds of success are higher over the long term. Absolutely. Um, I just got one question pop in my head from our conversation. It's you can buy a new franchise directly from the franchisor, but you can also, I think, buy a franchise location that's already been operating. What would you recommend?
Well, I get a lot of so that comes back to buying an existing business versus buying
Yeah.
a franchise or starting from scratch.
Yeah.
People, the vast majority of people would love to buy an existing business because they don't have
Yep.
to go through the grind of startup. Well,
Yep.
buying an existing franchise is kind of the hybrid, the best of both worlds. The
Yep.
challenge is if it's a business where there's multi-unit owners, the
Yep.
vast majority of those transactions never get to the market because other
Mm.
franchisees, one of my clients was one of those examples. When one franchisee is ready to exit, somebody else wants to continue and scale more. So as
Yep.
long as the business is priced right, it's going to be more than likely an internal transaction. If the business isn't priced right, or if there's problems with that unit, then it might go out to the
Mm.
market.
Then it goes to the
Now,
broader market. So this is something very important for people
yeah,
to understand.
yeah, but that's the caveat there for people to pay attention to, Robin, is that's if it's a multi-unit brand. If it's not a
Mm.
multi-unit brand, then those are more likely to go to the market right away. But the challenge again is it like any existing business, the owner thinks it's worth this, the market says it's worth this. So
Yep.
somebody has to make that leap of faith. I'm willing to pay more than what the market value is, so I don't have to go through the grind.
Yep. So for someone watching this who wants to make that leap, Gary, how do they contact you? What's the easiest way?
Well, the best way is LinkedIn. Gary
Yep.
Prenevost, LinkedIn. I've got a franchise, like my website is garyprenevost.com. You can go onto the FranNet website and search for a consultant and search for me by name, Gary Prenevost. So, but it's just helping people get out. And if they're not ready to contact me, but they want to learn more, then I've got a learning
Hmm.
site called youre2ejourney.com. The letter E, the number two, the letter E, the journey from employee to entrepreneur. There's a
Mm.
12 video session focused on the Canadian market. Most of the content is ubiquitous North American, but the funding and a couple of the examples are Canadian. It walks through the entire journey, what people need to understand. My video number 9, the spectrum of franchising, almost every franchise that's on the market will fit into one of my 4 classifications based on what is the work it takes to run, not the sector of the economy is. That's probably a great place for people to start.
Okay, well, this has been great. Thanks for the conversation.
No, my pleasure. I love helping people understand this journey. It can be a very exciting and a very rewarding life, but people need to understand what is the work it takes to drive
Yep,
success.
absolutely. Have a good one, Gary. Talk soon.
Thank you. You as well.